Hello dear traders, my name is Belugina and I'm the head of analytical department at Aggregate. Welcome to my weekly webinar where we discuss the Forex outlook for this week for the upcoming days. So let's start with presentation and then we'll move to the MT4, to the charts and discuss some technical moments. So here it is, our weekly outlook for the week from May 22nd to May 26th. And as usually, we start with CFTC data, Commodity Futures Trading Commission information about commitments of traders, or in other words, positions of large traders and large speculators, which help us retail Forex traders to understand what is the bigger picture of the events happening at the market. And this information helps us to understand the big forces in the market and helps us to find the trends and to trade in line with these trends. There are some interesting changes in comparison with what we saw a week ago. Firstly, let's talk about the aggregate US dollar position. All in all, we have a bullish or net long US dollar position. This position has declined, but in the previous week, which ended on May 16th, this is the last week about which we have the data available, there was some increase in the US dollar bullish positions. So the overall trend is that the market is becoming less bullish on the US currency, but some adjustment took place in the week which ended on Tuesday, May 16th. Unfortunately, this data from CFTC comes with a time lag, so we don't have the data for today, but still we can spot these trends, and the general idea is that despite some improvement in the US dollar long positions, the overall trend here is to the downside. Let's now see how this information may be broken into other currencies, which are also important, and they should need this information when we trade these currencies. During the past week, there were positive changes in the euro and the British pound, and there were negative changes in such currencies as Canadian dollar, Australian dollar, a small change to the negative side in the New Zealand dollar, and Swiss franc, Japanese yen, and not a currency but still an important asset, gold. Here we saw that the net position changed to the negative side. Canadian dollar now is in the largest net short position. You can see in the table here, and the bearish bias for Canadian dollar is increasing. Last week I told you that the net short position for Canadian dollar was at the record high, and we talked about the fact that when the positioning is so big and one-sided, there is the risk that the market players will close these positions, and as a result the rate will change direction. In case of Canadian dollar, we can see that even then this net short position remained at the record highs, the weekly change was to the side of increase in this net short position, and we got a new record high. I think that this week, as there are positive factors for Canadian dollar present, we'll see the reduction in this bearish position. So I think now the market has become more ready for a short covering in Canadian dollar. And all in all, this information allows us to expect some bullish moves in Canadian currency this week. So bears, the players who are negative on Canadian dollar, at this point will likely close these positions. Also, I'd like to point your attention to the euro. Here we have the biggest net long position if we are talking about the currencies. Not so long ago, we had a net short position on the euro. Last time we talked about this currency, the situation changed and the positioning switched from net short to net long. And now we are talking about the largest net long position among these currencies we have in the table. So the foundations for the euro are pretty solid, and the foundations for the bullish picture and the bullish sentiment about the euro are also pretty good. British pound, on the other hand, still is not in this positive territory. The net short position for the British pound is not large, but still it is negative territory. It is still present here. And some bearish positioning increase in Japanese yen. Well, here, despite the fact that there are some bullish factors for Japanese yen, like increase in the market's risk aversion, still we can say that large players are not really ready for buying Japanese currency in the medium and long term. So apart from its attractiveness as a safe haven, Japanese yen is not attractive for investors on its own. These are the conclusions we can make from these important commitments of traders' data. And we move on. We now look at the US dollar index weekly chart, and we can see that there was a really big move to the downside in this asset. The US dollar index is composed of several currencies, actually 6 currencies if I remember correctly, but the main part of this US dollar index is the euro. And when we look at the euro dollar chart, we will see that really the euro made a great leap to the upside versus the US currency. And this movement of the single currency has largely contributed to the decline of the US dollar index. Still, this index is a generally good measure and a good way to analyze the US dollar versus a number of currencies and not just one currency. And well, here the technical picture definitely shows us that the asset has broken several important support levels, and the picture is definitely bearish. We now see that the US dollar index recoiled down from the previous support, and now resistance line which is located above 99 area. And it seems like the index formed a triple top with the neckline located roughly in the area of 99.15. And this creates the situation where the asset is vulnerable for a bigger decline to levels around 94.70. So we can see that the distance between the current levels of the asset and this target of the triple top at 94.70 is sizable. So this is not the target for this week, but for the medium term and maybe longer term. That will depend on whether the bears here will be able to sustain this momentum. We can see that the US dollar index has slid below the 50-week moving average and then 100-week moving average, which is located at 97.65 and now is at the 97 point. Daily chart shows us that the daily moving averages, the 50-day moving average and 100-day moving average now have downside bias. And the 50-day moving average, the brown line you can see here at this picture, is getting close to the gold line, located just above 99. And this will be a dead cross and the confirmation of the bearish negative bias for the US dollar. So our targets lie at 96.30. This is 61.8% Fibonacci retracement of 2016-2017 advance, the next Fibonacci level we target. And at this point, there should be some support, I guess. At this FIBA level, the next level will be 96, and then we'll target levels around 95 and 94.70, which is the target of the triple top. So the previous support levels of the US dollar should act as resistance, and this resistance will be at 97.75. Here we have 100-week moving average, then 98 and 98.65 are the nearest resistance levels. So what do we have fundamentally with the US dollar? This worst week for the American currency in 9 months happened because American currency was hit hard by the political turmoil in the United States. The hype was caused by Donald Trump's firing of former FBI Director James Comey, allegations that Trump pressed Comey to stop investigating his former national security chief, and that Trump's campaign had ties with Russia. So a lot of things here, political things, which created concerns primarily that Donald Trump won't be able to conduct a fiscal stimulus he promised anytime soon. This is one thing. And actually even more serious concerns have appeared. And these concerns are that there may be an impeachment of the president, because there are claims that Donald Trump has abducted justice, and this is an impeachable thing in the United States. So I expect that during the course of this week we will hear more about this issue, because as far as I know there is investigation about this, about whether Donald Trump met with FBI Director James Comey and some other details of this affair. So the odds are that this factor hasn't finished affecting the US dollar, and that it has made some harm to the US dollar in the long term. So this corresponds with the bearish view on the American currency. What events should we expect in the coming days? Well, firstly, the most important thing, on Wednesday there will be the release of the Federal Reserve's May meeting minutes. The Federal Reserve, despite the fact that of this political turmoil, the Federal Reserve is still widely expected to raise interest rates in June, after a rather optimistic statement that the central bank released in May. So May's statement and May's meeting of the Fed was rather optimistic as far as we can judge from the data we have. And the FOMC meeting minutes are also expected to be in line with this optimistic scenario, in line with the idea that the Federal Reserve will raise interest rates on June 14th. Most of analysts think that political events, these concerns about Donald Trump's abilities, for this time won't affect the Fed's decision. All in all, the possibility of the rate hike, which is priced in by the market, is around 70–80%. So rather high. The market is pretty ready for June rate hike. The other question is that as this rate hike in June is already mostly priced in, we don't see how it can provide much strength to the US dollar, even if it's happened. And market players now don't really think that other moves from the Federal Reserve are possible this year. So the expectations of other rate hikes this year are pretty low, around 40%. So the conclusion is that the support for the US dollar coming from the actions of the Fed will likely be limited. And we will have some Fed speeches during the next couple of days. Here you can see them in my calendar. On Monday, later today, we'll hear from FOMC member Hocker and Kashkari. And on Tuesday, there will be many speeches: Brainerd, Evans, Hocker, Kashkari, and also on Tuesday, the release of the US new home sales. On Thursday, there will be an event which will affect the whole currency market, the meeting of the Organization of Petroleum Exporting Countries. And from the US, we'll have unemployment claims. On Friday, also some releases of the US statistical data, core durable goods orders, and preliminary GDP. Preliminary GDP in the United States is actually the second estimate of American economic growth in the first quarter. The first release was advanced GDP. Now is the second one. Advanced GDP from the first quarter wasn't very impressive, so we'll likely see whether this reading for the first quarter is adjusted or not. And let's say a couple of words about this event, which I said will be important for all currencies. The meeting of the Organization of Petroleum Exporting Countries will take place on Thursday, May 25th. And the organization is expected to extend their output cuts by 9 months. The expectations are pretty positive for the quotes. Now we can see that the rally in oil prices is continuing, and there is a scope for further extension of the rally. We have in focus the resistance line, which is located in the area of 55.80 for the Brent futures chart. So some more advance is possible. The market is continuing to price in the bullish outcome for oil prices on Thursday. After that, it is doubtful that oil will continue rising, because this situation will likely be buy on rumor, sell on fact. And the fact that oil will soon reach important resistance line will likely be a trigger of some decline here after the OPEC meeting. So I would suggest that if you are trading oil, you would take profits on Thursday or before Thursday in this resistance area of 55.80. 580 for Brent. And during the next several days, during Tuesday and Wednesday, I think the picture will be positive for commodity currencies, and then there may be some retracement on late Thursday and Friday, as we will know the exact outcome of the meeting of the oil exporters, and probably as the market will begin once again having doubts about whether the nations will comply with this production cut agreement. So this is our fundamental background for not only US dollar and commodity currencies, but other currencies, because all currencies on Forex are more or less sensitive to the market's risk appetite. Higher oil prices reflect improvement in the market's risk appetite. So depending on this, we'll get the picture for the currencies we are trading. Oh, here I have the picture which shows us how the market players estimate the chances of the Federal Reserve's rate hike. This picture has been lost in my slides. And here you can just see that the current estimate is of 78.5%, that the rate will be increased to 125 basis points on June 14th. And on Friday, the possibility was 73.8%, so some increase here. And despite the fact that US dollar has suffered last week, still markets are pretty sure that there will be a rate hike. Despite this fact, my general conclusion for the US dollar is that problems of Trump administration should remain in the center of the market's attention. For now, the attention was a bit diverted from these problems as Donald Trump went to Saudi Arabia, and there he had done some negotiations, made some agreements. But I think that these problems will still come back, and it will happen in the next days, so already this week. Plus, there was a missile launch in North Korea, which is a negative thing for the market's risk sentiment, and negative factor on margin for the US dollar. So the general idea is that we are selling the US dollar on the pullbacks to the upside, or if the asset continues to travel south. And now we come to our trading terminal. We'll speak about the other currencies and other fundamental factors which influence these currencies. Starting with our, I think, favorite currency pair, euro-dollar. And last week was a very successful week for euro bulls. As we can see that there was a big bullish candle on the weekly chart. We have here managed to overcome some important resistance levels. Firstly, 100-week moving average at 109.90. Then the weekly Ishimoku cloud around 1.1070. And well, now we are trading above 1.12 mark. So the picture is pretty positive. And if we talked about the triple top in the US dollar index, here for the euro dollar, the situation I think is quite opposite. Here we can distinguish a triple bottom formation with the neckline, which is located roughly around 108.30, 108.40. So we can see that there is scope for some further advance of the pair to the levels around 1.13, 1.1370. This is where we can target after the euro dollar reached the neckline of this formation. In addition, we can have Fibonacci here, Fibonacci of the pair's decline in the year of 2016, and we can see that the pair has gone past the 61.8% Fibonacci retracement, and now the next target lies at 78.6% Fibonacci, which is located around 1.1345. So you can see that the bullish scope for this week is certainly less than it was last week, but the target may be put somewhere around 1.1345, which is roughly 100 pips to the upside from now. Support levels from the weekly chart is allocated at 1.1135 and 1.1070. The main reason of this bounce in the euro dollar was certainly political turmoil in the United States, which weakened the US dollar. I think that this is pretty clear. But the situation doesn't end here, and we have some underlying factors for the euro which are positive. Political risk in the euro area has subsided. The European Central Bank is expected to taper its monetary stimulus, and the European economic performance is improving. So this better picture for the European economy allows us to expect some positive comments from the European Central Bank. Actually, we'll hear from the ECB this week. ECB President Mario Draghi will speak on Wednesday. In addition, there will be some data releases on Tuesday. Pay attention to the euro area's flash manufacturing and services PMIs. These releases will come for May, and these PMIs represent the latest data on the euro area's economic health. And also there will be the release of German IFO business climate. Also, on Friday, there will be a ECB financial stability review. This is a release of minor importance. On Thursday, there will be lower liquidity because of German and French bank holiday. So some more volatile moves on the announcements from oil exporters are possible. The main risk for the euro, I think, comes from Mario Draghi on Wednesday, as well, he is expected to say something positive, to acknowledge the positive things which happened in the European economy. But we know that Mario Draghi is usually rather cautious, and the ECB is not a great fan of high euro, not a great fan of expensive euro. So he may try to somehow cool the market and provoke some negative reaction in the euro. But I don't think that he will say something that will be of importance in the medium term. So any short-term negative pressure which will be created by Draghi's comments will represent, I think, buying a bullish opportunity for euro-dollar traders. So I think that it would be wise not to trade on the release, but to wait for the initial market reaction, and if it is to the downside, then use it to open a long position. All in all, the next meeting of the European Central Bank will take place at the beginning of June, and frankly, not much is expected from this meeting. The market may think that the European Central Bank is planning to reduce stimulus, but I don't think that very good clear signals will come from the ECB. So the force of the euro's increase will likely subside a bit. The outlook is still positive, but the pace of growth should decline. And much will depend on the data from the euro area and on what happens in America, on the American side of things. If we'll see another spike in the US dollar weakness, then the euro rally will accelerate. But all in all, I don't think that we should now make great upside targets. I think that we should be kind of humble with our targets, and for now think about 1.1345 region. Let's have a look at the daily chart. Here we can see the picture in greater detail, and here you can see the pivot point indicator applied to this time frame. Of course, one thing is that the currency is a bit overbought, so retracements to support around 1.1115 is possible. At 1.1115 area, we have the weekly pivot, and as long as the euro stays above this level, the weekly picture is positive, and the weekly pivot resistance levels, the upside targets provided by this indicator, are a bit different from what we had with other technical instruments. These are levels of 1.1305, 1.1405, and also some more distant target is located just below 1.16 mark. So I suppose that our working levels this week are 1.13, 1.1345, and 1.14. These are the levels, and a support around 1.1113 and 1.1130 and 1.1070. This is the picture for the euro dollar. The overall fundamental and technical picture is positive. Let's come to the British pound. Firstly, the weekly chart, and here we can see that the British pound also made a bullish move last week, though this move wasn't as big as what we saw for the euro. Here we see that the weekly Ishimoku cloud continues to provide resistance for the British currency. The cloud is rather heavy, so its lower border currently corresponds to the important psychological level of 1.30. At the daily chart, we can see that let's see here that the pair has been testing levels above 1.30 already, and even closed above 1.30 on Friday, but still the momentum here is a bit lower, and MACD indicator on the daily time frame is not confirming these high levels, these new highs of the price. So I suppose that here the way to the upside will be a bit slower, and we may continue revisiting support levels in the area of 1.2918 and maybe even levels close to 1.28 support. The moving averages certainly produce a bullish picture on the daily chart. On the weekly chart, we have positive lineup of the Ishimoku indicator, although this intersection of the red and blue Ishimoku lines happened below the cloud, which kind of makes this bullish signal weaker. And as a result, we see that it's really hard for the bulls to overcome 1.30 threshold. If the bulls make a more convincing attempt to enter the cloud, then our target will lie around 1.30 to 35. This is 23.6% retracement of this big movement to the downside from the highest seen in 2013 to the bottom of 2016. So this would be the initial bullish target here. On the downside, on the weekly chart, we find a really strong support located at 1.2740. Here we have the 50-week moving average, and here also lies the area of previous highs and lows of this currency pair. So also the weekly pivot on the daily chart provides us with closer upward targets. They are at 1.31 and 1.3163. So before we get to 1.3235, we'll need to consider these two resistance levels. As for the fundamental picture for the British pound, here once again there is talk about Brexit. Today we'll hear from the UK Prime Minister Theresa May. She will speak later today. Also, there are threats of Britain to quit Brexit negotiations unless there is a bill payment of 100 billion euro, some kind of negative things. So we can see that still there are many contradictions between Britain and the European Union, and these contradictions may resurface, being a source of pressure on the British pound. On Tuesday, the Bank of England Governor Mark Carney will testify on inflation and economic outlook before Parliament's Treasury Committee. British inflation figures continue to move to the upside. Actually, CPI rose by 2.7% in April, while the Bank of England said that it is ready to tolerate inflation at around 3%, but a higher rate may make the central bank to raise interest rate. So we will need to stay tuned on Tuesday for the information about Carney's comments. I think that this will be a significant driver of the British currency this week. We'll get fresh information from the Bank of England. If Carney says that it is ready to tolerate higher inflation, if he underlines that, then the British pound will likely feel negative pressure. If Carney gives signal that high inflation will make the central bank increase interest rates in their foreseeable future, then this will be a reason for the British pound to rise above 1.30 and go towards 1.31 and 1.32 targets. And on Thursday, pay attention to the second estimate of British GDP. And also the meeting of the oil exporters will also be important. So returning to the technical chart, the main idea is that the medium-term outlook for the British pound is rather good, but we lack for convincing break of 1.30, and so the return to lower levels, support levels I've mentioned, is quite possible. So lower levels will be some opportunities to increase longs, and as long as the pound trades above 1.2740, the general outlook will be positive. Longer term will be able to be bullish on the pound in case of significant and convincing break of 1.30 level. US dollar, Japanese yen. The pair, let's see what we have on the weekly chart. The pair has turned to the downside last week. Here, the US dollar was weakened by the troubles of Trump administration, by the increase in demand for the yen as a safe haven currency. There was some improvement in Japanese GDP. So technically, the pair returned to the Ishimoku cloud on the weekly chart. It's trading slightly inside this cloud, but is supported by 200-week moving average at 110.64 mark. Decline below this level should open the way down to support at the area of 108.80. On the upside, well, the pair has resistance levels around 111.70, the first resistance, and then we have 100-day moving average around 112.70. So these are the levels to focus on. Likely this resistance line, which was breached earlier, still will provide resistance for the pair if the US dollar tries to strengthen. Here we don't see significant bullish momentum. We don't see that the US dollar has potential to strengthen. The main scenario is that the pair consolidates between 112.50 and 108.50 in the coming weeks. Increase in the market's risk aversion can make the greenback go lower and test the lower border of this range, while some stabilization can allow the US dollar to get a bit higher versus Japanese yen. But the main bias, I think, will be to the downside, and we'll get this consolidation in the levels I have mentioned. Here, once again, pointing out that Japanese yen is not really attractive for investors on its own, and this is why the pair is driven by the events in the United States primarily, and these negative events from the United States may lead to the pair's consolidation and some negative bias, some testing of a bit lower levels. Let's quickly check the calendar for our commodity currencies: Australian dollar, Canadian and New Zealand dollar. Pay attention to the Bank of Canada's meeting on Wednesday. I think this is the most important thing in terms of events in these economies, and also certainly the Organization of Petroleum Exporting Countries meeting on Thursday. And let's have a quick overview. US dollar, Canadian dollar has made a top just in the area of 1.3760, now returned below support at resistance at 1.3570. Now support is provided by the 50-day moving average at 1.3480. But it seems likely that this level will give up, and the pair will travel lower to the area of 1.34 and probably even to 100-day moving average at 1.3440. Positive expectations of the OPEC meeting Higher oil prices certainly represent a bullish factor for Canadian dollar and consequently bearish factor for the US dollar. The pair recoiled up from the upper border of the trading channel, so it's quite reasonable to see that we'll test lower levels in the coming sessions and in the coming days. Australian dollar is trying to break higher versus the US counterpart, and the close on the daily basis above 0.7460 will allow us to test 0.7485 and then to go to 0.75, 0.7516. I think it's a bit more difficult to trade Australian dollar than Canadian dollar, but some bullish action is still positive here. And New Zealand's dollar is also trying to get higher. It actually is testing levels above the first support of the pivot levels at 0.6964, and the next support is located at 0.70. So this is, I think, a perfectly relevant bullish target for this currency pair, 0.70 mark. So let's make a short conclusion of what we talked about today. As for our main currency, the US dollar, it continues to be under pressure. We have had a look at the technical chart, we had a look at the fundamental factors, and the main idea that we have the negative trend in the US dollar and some pullbacks on the to the upside in the US currency should be used as an opportunities to enter short positions. Euro dollar has targets around 1.1345, 1.14, and here we will buy the euro on some retracements to the downside. British pound feels rather well, but has some weaker momentum than the euro. It may suffer some retracements to the downside, and we need the confident break of 1.30, I'm sorry, to target 1.31 and 1.32. US dollar Japanese yen is in the sideways range, but we think that the pair will have negative bias and are targeting levels around 109.75. US dollar Canadian dollar will likely revisit 1.34, and New Zealand's dollar should test the psychological level of 0.70. These are the main things I wanted to share with you today. I thank you for your attention, and I will be very happy to see you next Monday and discuss the outlook for the next week. Thank you for your attention, and I wish you successful Forex trading. Goodbye, see you next time.